Hey traders, Nick Shaheen here, looking at BOX, which is not so much the looking at that stock in particular, but rather at breakouts in general. I have shared several trades in BOX that have been winners so far. Luckily this morning, believe it or not, when markets overnight was falling, the markets opened red. Not very red, but red nonetheless, 200 points on the Dow thereabouts. BOX and other momentum stocks set new highs, or at least rallied hard. In the case of BOX, it rallied up 3, 4, 5%, whatever it was, at some point during the day. So which breakout do I chase? These momentum stocks are, when they're running, they look like they're going to the moon at ready to correct at any point in time. So people get scared out of them, and on the way down they look like they're falling into an abyss. So at which place do I catch it? So first of all, I have to do a little bit of homework on the company itself. In this case, I know what area they're in, which is the cloud, and it's hot. Long-term thesis, it's going to be a rhetoric that's going to be talked about, that as the future goes, this is where everybody wants to be. I don't like it. I use it, but I have used it years and years ago. It was free. I think they gave me 50 gigs free for a period of time, but it stuck for a long time. But I tend to prefer to using Google because of the Android, etc. So Dropbox, Box, yes, they are in the right arena, but will they have a lot of upside down the line? I don't know. But I know that they will have support. So if price falls a lot, I know that there'll be buyers, if not mega tech companies buying them. So I'm not trading that potential. I'm just telling you my concept of the stock itself. So I have to trade within those confines. And within my macro, which is still more positive than negative, given everything that we have with the fundamentals. We do have headline risk, but other than that, so good days should be good for BOX, bad days should be bad for BOX. Today, a bad day was not bad for BOX, so it speaks well to the company. So which one of these rallies do I chase? I tend to be, once I know the stock, I tend to trade it on technicals, or at least not to trade it on technicals. So anywhere around here, I would have been more comfortable selling puts and put spreads than buying calls, because I don't have a level from which I can get excited about. Here, different story. A breach of this level tells me that there could have been a breakout. Why? Because we had higher lows knocking on the neckline. It did deliver, but then it gave it all back. But had I sold puts or put spreads, these would be fine, because the way I sell puts and put spreads, I would want 20% or whatever protection. So then again, several times it's happened here. So what about here? Do I chase it? Well, here I would have said, you know what? I would have set an alert. Anywhere above this, I would go out and go long. This is a daily chart, so it's fairly accurate, not accurate, fairly fast. So it had a fantastic rally. We rewrote it. Let's assume I just came into the world in the last few months, and what do I do here? So if I was long, and we were, and it bounced against levels that were important. So where do I get out, right? So I noted that I usually would get out when the neckline is lost. It should provide support, but then I think we had a couple of headline days where it fell out of source. These boxes refer to potential targets and areas where I would sell risk. So this was a potential target on the breach of that, and this would probably have been a potential area where I would have sold risk at the prospects of losing this, because premiums would be elevated. So on a red day, I would collect a lot of premium, which I did. And then I saw the bounce. So the level, I didn't trade ticks, so I didn't see a big red tick here and then get me out of everything, and including these. I had booked profits in the calls, but losing the level, there's a lesson here. Part of the lesson is losing the level tells me that, okay, we might have some downside, but I think this area would be supportive, and indeed it was. Since then, higher lows, knocking on what, if I extend this out, on the same neckline from which it came. So now onus on the bulls to show that they can break through it. Indeed, I put that little tiny line here in my previous videos to members. So was watching. I had a trigger right here, an alert. Tell me when this is going on. And last week it told me that something might be going on. I think on the 14th I went long, sold more puts, and between that and the 15th added calls. Today the calls were a huge win, I think like 28%, 29%. So I booked some. Why? Because it gave me most of my potential upside that I had drawn ahead of time. My chart, if you see it before today, and yesterday, this yellow line was already drawn. So this was a potential scenario, and boom, in one day, almost all of it comes to fruition. So I book the calls, I leave some of the puts, so I'm still long box, but less so than yesterday, and I could re-engage. So now I set another alert to see. So onus was on the bulls to show they can retake the zone. They did. Now onus is on the bulls to show that they can continue using it as forward support like they did here to get higher. So from here, if I want to do a lottery ticket, I would, go out in time and give myself space and time. I will share the details with the members, but the idea is levels. Instead of watching ticks, watch the levels, at least for me. Because, here it's going to the moon, everybody will be buying, but to me, this may have been a target upside of sorts, so I don't want to chase it, but I would ride whatever I have. Where do I get out if I'm long from here, which was the last breakout? Well, I get out. You see why I wouldn't chase here, because this would have been an eyeball target-ish measured move area of this breakout off of this neckline, which is not a hard line in the sand. For me, it's more so a zone than a hard line. So, in fact, if I extend this backwards, that's probably where I put the box there. It's that neckline from which it broke out. So then, okay, holding. Well, if it doesn't hold, it may come back to the neckline, but then let's see if it uses it as support. And it did. Same question on this white. So I don't get shaken out, or I don't change my mind on, or I don't start to short on this red line, because these are preset levels that I have seen. So it's not out of the scenarios that are in front of me. So levels, watching is way more profitable than watching ticks, because I would end up reacting to the tick and doing something I don't want to do. All right, Nick signing out. If you have any questions, you can email me at sellspreads@gmail.com. sellspreads@gmail.com.